Israel Skosana, Chief Product and Scheme Officer at Pay Inc. Welcome to both sides. What exactly does that mean? So what's your role? What do you do? And secondly, you've only been Pay Inc. for a very short space of time.
Thank you so much for having me this evening, Randall. So at Pay Inc., I'm the Chief Product Officer looking after all the products that we offer. In this case, everything from EFT to PayShop to our cash business, as well as looking after our scheme offering, such as transactions cleared on an immediate basis, which is our cross-border scheme offering, and our PayShop as well that falls under that space. So if anything, all the creative juices around how payments should take place, how payments will take place, is what we look after in the product space at Pay Inc. In the Pay Inc. brand, you're right, only a month old, but definitely exciting times where it says it's the new. And that's what's taken place over the last month, where we've transforming the business to represent the next of payments going forward.
So previously you were BankServe. Why the change? Why the adaptation?
Yeah. So this transformation the name changes shows the intent of the organizational transformation that's taking place, as well as the industry transformation that is occurring. What this is also driven by is also regulation changes that are occurring from the top, in this case within the Reserve Bank, all the way down to the payments ecosystem. And the materiality of that change says that payments should be open to all. And how do we democratize payments so that we have more participants in the payments landscape, specifically digital payments, so that we can see the economic benefit of that at the end of the day? So that means that BankServe had its place for the last 50-odd years, 53 years to be exact, and now needs to show up differently to represent this new. It needs to be inclusive, representing the Inc., showing that we're able to do business with fintechs, merchants, telcos, and bring those players into the payments ecosystem so that we can unlock this potential that is available to us going forward.
So now that we know who you are and what you do, let's take a step back. So why are payments so important? You know, I go to a bank, I used to write checks, I have a credit card, I have a debit card. To an extent, I know what the costs are that I'm paying. But do I really think about it? And how do changes in the payment environment impact me, the individual, and the broader economy?
Indeed, and what you've also shared there is the evolution of payments when we start off with checks, which was recently discontinued. But payments is the lifeblood of the economy. It allows for the flow of money to move across seamlessly, and our responsibility at Pay Inc. is to make sure that it is efficient, secure, and to a degree, even instantaneous. So when you receive your money or you've sent the money, you expect it to be landed in your account or in your wallet as soon as possible. And so that money that flows through the economy is key to ensure that you have that multiplier effect where funds is moving and business and commerce is occurring, ultimately to make sure that the economy enjoys the fruits of that. The evolution that you've shared with us now, from checks all the way to credit cards, the ability to pay with your watch, your ability to pay with your phone, shows how the instantaneous element, the convenience element, has become key to enabling payments to occur. And what consumers are looking for, and even businesses, is the convenience element, the security element, and then overlaying that to make sure that you have that complete certainty that the transaction takes place. And digital payments, which is a key focus for us at Pay Inc., is trying to ensure that it is an alternative to cash, but for the greater good of the SA economy. So based on this Reserve Bank study, it costs South Africa 30 billion rand a year to manage, produce cash within the SA context. Now you can imagine that it covers transportation, security of that cash, insurance of that cash. what would it mean to the South African economy if we were able to reduce that just by 10%? If we were able to make sure that payments were as fast as cash, providing the certainty at the end of the day. And that's the responsibility that we have at PayInc, is to make sure that we have those digital payments enabled and then available to all the payment service providers, like I mentioned, from telcos, banks, merchants, to say, listen, fintechs, why don't you take these payment rails that we've put in place and overlay it with all the value adds that consumers need, that your consumers, your niche knows better than we do, obviously at a broader scale. And that's the opportunity.
So you're the framework of a clearinghouse, and I can sit on top of you and make payments available. I sit in your rails and make those payment gateways available. So your boss, Stephen Linnell, was saying that, this kind of changes everything. And what you're going to focus on is financial inclusion by making digital payments so much more available across the country. What does digital or rather financial exclusion then mean? How are people excluded if they can't be incorporated into this digital world?
Indeed. So South Africa has an excellent stat around its banking population. We have 86%, if I'm correct, in terms of the South African adult population that have bank accounts, based on one of the latest research papers. What the challenge is how do those bank accounts get used? And that's where we see the exclusion component come through, where they are just withdrawing the cash in some cases and then utilizing the cash on the day-to-day spend. The inclusion element says I'm able to keep my money in my store of value, a wallet, a bank account, and able to then do transactions in a safe, secure, digital manner. And that's the opportunity which says that is financial inclusion at the end of the day, where it is also cost effective. So you can't have a situation where it's prohibitive to do purely because of the cost associated.
And that's the 30 billion rand saving you were talking about earlier.
But let's even make it real. If I wanted to do a payment to you, how much does it cost me just to send you 10 rand? To find myself paying you 5 rand out of the 10 rand just to do the transaction shows that there's already some type of exclusion taking place. And the real drive then is to get the cost down, get the technology out, and we want it far and wide, but then get the cost down as much as possible with our payment service providers and say, listen, this is the offering that we're providing to you. Make sure you get your value, provide the value adds, but also at the same time, make sure that it's pervasive and available so that the entire tide can rise through that saving of having the digital payments available.
So tell me about one of your products. Tell me a little bit about PayShop. Tell me about the background, how it kind of came into being, and kind of where it's at the moment and what you see the future of the product is.
Yeah, so PayShop is South Africa's instant payment solution under the Foster payment rails, globally also referred to as a rapid payments platform. And it is a highly advanced payment rail that ensures that you have rich data in that payment rails, and at the same time that instantaneous, in this case, 10 seconds, where you should be able to get your money reflected into your account. And that upgrade of that infrastructure that we say, moving across from EFT, real-time clearing checks, shows that from a paying side, we need to continuously invest in our existing infrastructure, maintenance, but also look at what is the next generation of technology available and then make sure that we can grab that. And this is also driven through cloud computing, that these technological feats allow for us to say, oh, right, great, we can capitalize on that technology and introduce the new to the market. So PayShop was introduced in 2023. Also, the importance of collaboration, where the South African banks worked closely to say, listen, with the Reserve Bank, how do we bring this technology together? And then who is the enabler for that? At the time, BankServe, now PayInc, is the enabler and operator of that technology. And its growth has taken place significantly. In my latest state, I think we're looking at around about 40 billion transactions. It shows that it's materially been taken up, where consumers are starting to use it for person-to-person transactions, just with your cell phone number. But also at the same time, people are moving away from doing EFT transactions and saying, well, why can't I do an instant PayShop transaction? So we're satisfying two audiences at this point in time, which is to say you are able to move those who have the ability to do payments on the EFT, but also then introducing the new, which is just give me your shop ID and I can pay you immediately. And that's
also really important because we have a very young population in our country.
Exactly.
I mean, they're going to move into I don't want to call it the job market, but they're going to be transacting, as it were. And the world certainly is not going to look in the next 5 to 10 years, certainly not going to look the way that it looks now. And the individuals involved in this world of transactions are not going to be the same individuals.
No, Randall, spot on. The world is evolving, and I think the way the youth have taken up technology, it is very clear that adoption is not a question. They pick it up quickly. We can see it based on M&O data. We can see it on the adoption of smart devices. It shows that we need to provide payment tools that can sit on that technology. Also, once again, that is cost effective. It can't be exorbitant, preventing adoption at the end of the day. And then ease of use. So let's go back just to PayShop. PayShop has been great in terms of its rollout. The focus now is to say, how do you make sure that you have an excellent user experience? Everything from onboarding to doing a payment, and also having additional areas where you can do a PayShop transaction. So comfortably, like I mentioned, I can pay you with your shop ID straight to your phone. But what if you are a small merchant and you have a website? Why could I not pay with PayShop on your website? And that's the opportunity that we're looking at next, to say, how do we partner with the fintechs? How do we partner with the telcos and the banks to say, let's enable PayShop for QR payments in the retail environment, so merchant space, and then also in the e-commerce environment through a QR code. And that is the exciting development that's taking place in our environment. And then that will also migrate to the technology such as tokenization, where you're able to just tap your phone, tap your watch, but make sure that it's convenient, because that's where you get adoption at the end of the day.
And certainly a great enabler for small business.
Indeed. And that enabler is because of ease of access, but also costs. We need to look at how all participants, how do we reduce the costs of payments to accept and also to send?
Because cash flow is so important to SMMEs.
That's exactly it. And the instantaneous element is what's key for that cash flow, is to say, when I pay you as a merchant sitting in Tembisa, you will get your money in 10 seconds.
Right.
That means I can buy stock the next day,
Sure.
opposed to when I have a traditional maybe card payment solution where I need to wait for settlement and the likes. So we are seeing payments evolve initially just incrementally, but then we also have these massive leaps. And these leaps are now not just for consumers, but also for merchants on the other side. How do we reduce the costs? How do we make sure that it's more efficient? And then how do we make sure that it's instantaneous?
I looked at what might be your payoff line, making great connections. Why are these connections? Why do they seem like they're, as I say, there's more to this ecosystem just than me, engaging in a transaction, purchasing something? Why are those financial and commercial connections so significant for the country?
So the payoff line, make great connections, also illustrates how Pay Inc. strives to be the epicenter of payments within South Africa, and by bringing great minds, great companies, regulators together to solve for financial inclusion. And that is only possible through collaboration. And it was a no-brainer then to say that should be one of our core purposes and values going forward, is to say collaboration is key to success. What our responsibility is to make sure that you have that foundation allowing for that collaboration. And that foundation is based on technology, expertise. South Africa's rich in payments expertise. And it shows where we have these innovations and these feats that we've spoken about, to say we are constantly evolving payments going forward. The South Africa gain, and specifically SA Inc., is a good news story for all. It's for shareholders, where their organizations, say, let's say, invested into merchants, invested into banks, should see their cost to income reduce because the cost of payments is reduced. You see consumers seeing the benefits of that because of the ability to do safe, secure, and cost-effective transactions. And then you should see merchants enjoying the benefit as well to say, listen, we've gotten our money immediately related to the cash flow element that we spoke about. And then that should drive for that cash displacement to take place. We're not saying that cash is going to disappear, but what we're saying is that let's reduce our reliance on cash in South Africa, because in actual fact, it is good for you as the consumer, it's good for the merchant at the end of the day, and ultimately it's good for SA Inc.
We also don't want a situation where, from a technology point of view, and we spoke about, a very young population, where they've kind of moved ahead and the sector is lagging. How does this affect the banks? And what is the relationship between Pay Inc. and the SARB?
So at the moment, there's a transaction that is taking place with the South African Reserve Bank to acquire 50% of Pay Inc. That is subject to competition approval and the likes. And the banks still remain shareholders. And ultimately, this could be a great example of public-private partnership at the end of the day, where the banks remain core shareholders as well of Pay Inc. And then will be made up with the SARB. And that will also still allow for significant collaboration at a shareholder board level, and then ultimately on the ground experience that consumers and businesses will enjoy.
So that's going to certainly change the landscape quite dramatically. I wanted to talk about the regulatory environment and the implementation of Basel III and other regulatory environments. How do those affect the banks?
So from a bank perspective, obviously it will link to their balance sheet and how their asset allocation in regards to Basel at that point. But in the payment space, what we really seen is a change where the South African Reserve Bank is trying to make sure that it's open.
So they're driving.
They are driving. And this is under their Vision 2025. And the Reserve Bank's Vision 2025 document makes it very clear that financial inclusion is a priority. And how do you satisfy those financial inclusion targets is by opening up payments. And a clear distinction between payments and banking. So deposit taking resides with the banks. The banks have those responsibilities.
I still need to go and ask them for a loan.
And credits and so on. But when you do bring in the payments element, you suddenly digitize an environment that was excluded against cash. What does that mean also for the bank? It creates the opportunity to say, I have records now of the performance and turnover of this SME that has been doing business and accepting PayShop transactions. Suddenly that could feed into banking data that says, oh, we can offer them some loans. So in actual fact, you're unlocking not only payments economic opportunities, you're unlocking economic credit opportunity based on the digitization and record keeping that comes from digital payments. So if anything, the worlds work together, but it's unlocking it to make sure the payment side is available to all.
Also, one then in the environment has a view of those transactions.
Yes.
Obviously, the data will be compliant. There'll be governance issues around that.
Yes.
But you'll be able to understand the types of transactionality that are happening across the country, which you may not have had a view of when we had cash.
Indeed. And so we also need to look far and wide across the globe to see what are those examples where it says, where has it been done before and where can we learn? So we take note of Brazil with its Pix payment solution there, the largest retail platform in Brazil at this point in time. We look at...
One of the Brazilian banks has taken an interest in one of our local digital banks.
As well. So you start to see these global examples, Brazil that I talk about, UPI in India, and say, this is how you unlock digital payments. But we also don't need to look far. Let's look at the wallet solution, M-Pesa, in Kenya. How you uplift society just by unlocking payments at the end of the day.
So I was there at the time that it was introduced, and in fact, I knew some of the guys from Safaricom.
Okay.
And it was dramatic.
Yeah.
It was really dramatic.
And it shows where you have technology, you have adoption, what can it mean for the economy at the end of the day? And let's actually maybe pause on the economy. What does it mean for everyday lives? So suddenly you can pay for medical goods with ease from money that has been sent from South Africa across because of digital payments. And that's what we're looking at, is to say, how do we make payments easier to unlock real life change at the end of the day? You talked briefly about other territories.
you were in Paris recently at a conference. Tell me about the conference and tell me what you learned about the environment.
Yeah, there was a international domestic scheme conference that took place with around about 30 domestic schemes, multiple central banks and central bank governors. And the real question from this conference was around how could we learn from other domestic schemes to make sure that you have sovereignty as well as effective, efficient, and secure payments available for your nation. And it was interesting to learn from other nations, because then you can see that sometimes the challenges are the same, and how do we can take notes there, but also the nuances associated with it. So interest in Brazil, connectivity in remote areas starts to become a challenge, and how do they solve for that? By doing instant payments, but with no connectivity. In South Africa, we're blessed that we have good coverage and communication networks covering most of our land. So it's not a challenge for us, but it is interesting to learn from others.
Of course.
One thing that is certain is we also need to make sure that South Africans are in control of their payments ecosystem, to make sure that the sovereignty of SA is always intact, no matter whatever takes place across the globe. And that is key through having the likes of a paying that becomes a national payments utility, to ensure that there's continuous ability to do payments irrespective of circumstances, and the technology continues to run.
So you make the rails available, but how does one drive adoption? Because, if people are, with respect, if they're used to something, they might just kind of, go on doing it. And you may just need a moment. We spoke about kind of the changes of having so many young people coming to the payments environment. But until then, how does one drive adoption?
Indeed. So foundationally, we need to make sure that the user experience is one that is easy. One that one could even say the grandmother test. Do they know what to do? Is it easy? Is it intuitive at the end of the day? In saying so, then you need to see who's the ideal audience to take on that adoption. And you mentioned it earlier, the youth. Most of our growth has been coming from youth spend on the person-to-person side. We've done significant activations at universities, financial education, but it's because we see the youth taking that shop ID and saying this is the only way to pay.
They're running with it.
They run with it. What is next, though, that is required is to say our participants, such as the banks, how do they make sure that it's easy to find the way to do a PayShop transaction on the bank in-app? How is it easy to make sure that you're able to register for your shop ID on the bank?
Is it front and center?
Front and center. And so working closely with the banks, we are making those improvements with them to say, this is how best practice is looking at making sure that adoption takes place at the end of the day. And then make sure that it works. If a customer has a bad experience, they don't do it again.
Absolutely.
And so that first experience...
They go back to what they're used to.
Exactly. And that's because what we expect on payments is certainty. We want to make sure that we pull out that card that is going to work at that till. We want to make sure when we put in that, do that transaction online, that it's going to go through. Because there's a sense of certainty that comes with it that we want to make sure that customers feel with the product. And in this case, PayShop is designed to make sure that it's always up, it's available, it's secure, and it provides instant transactions at the end of the day.
I had a guest on, a professor in the AI space, and I'm going to ask you the same question I asked him, but obviously in a different environment. What does the world look like in the next 5 years? What does South Africa look like in the next 5 years in terms of the payment rails and the gateways and adoption?
Yeah.
What would you like it to look like?
And what we're striving towards, and as the leadership of Paying committed to, working closely with the Reserve Bank and our partners, such as payment service providers, is to have the cost of payments reduce. I think you'll definitely see a material cost structure change to payments take place, that there will be... it will be extremely convenient, to the extent possibly intuitive, where you are able to browse a website and just do 2 clicks and a transaction takes place. It will definitely be more secure. you will see more attempts at different types of scams, and fraud prevention will be a priority. And we'll make sure that we make sure the environment is a secure one, the rails are a secure one, and customers and consumers at the end of the day are safe and secure when they do payment transactions. But if anything, I think it's an exciting time in payments. You'll see payments coming from players that you never thought about, being really solving for niche challenges in specific areas.
And that's obviously, I wanted to talk a little bit about, that's a major opportunity for a new entrant, right?
And you will see new entrants come through because of the rails creating an environment where you can offer that new. And that's the exciting part about it, which is to say, as investors, venture capitalists, fintechs, banks, what are they seeing as opportunities? Because that's where they will start to invest their funds and their efforts going forward. We're ensuring that those rails are there for that to take place. And the winner at the end of the day will be South Africans.
What is and I guess I have to ask so many guests this question, what do you think the role of generative AI is going to be in this environment?
We will see it become part of payments. We will see it come through in terms of intuitive suggestions, recommendations,
how-tos,
FAQs. It will become the norm, and the adoption is actually coming through from the youth again, where it is included in research, conversations, just want to do fact checks, help me find. We can already see that change taking place, and it will come through into the payments environment. And
so it's going to be part of kind of I don't want to call it an AI zeitgeist, but almost a next-gen tech AI-led zeitgeist.
And in saying so, it would be, though, an evolution. So it would... In that evolution, it would say we have moved from an internet era, searching and so on, to always connected and some form of intelligence, predictive intelligence on queries that we have. And that then says, wow, well, how can that be used to protect us? How can that be used to make sure that we have financial awareness and skills and tools available to make sure that we are financially responsible? How does that unlock credit opportunities to expand one's business, to get a home, to get a car? It will be built in, and the winner will be the entity that is able to absorb all that information and say, great, I can tailor something for you. And that's where it's going to be a lot more become a personalized payments experience going forward.
Israel, I'm going to wish you the best, because I think it's obviously in all our interests. And I certainly, I also, as I say, foresee a lot more engagement in the space and a lot more flexibility and efficiency, which I think South Africa definitely requires.
No, indeed. Thank you so much.
Thank you.
Thank you.